It's been exactly a year since oil prices closed at an all-time high above $145 a barrel. Right now, though, oil is extending its losses and is poised for a third week of declines. That's a check on crude futures trading at $66.33, down 0.6%. Now let's get more on oil and the commodities market and bring in Christian Smollinger, our oil reporter from our Singapore newsroom.
Yes,
Christian, so how are let me just ask you first, how are those surprisingly bad unemployment figures from the U.S. impacting the oil market today?
Hey, Susan. Good morning. Well, I think more than anything, it's really undercut the expectations of a demand recovery. When people don't have jobs, they're going to be not driving to work, so there's going to be less gasoline demand. And so it also just kind of adds to the overall bearish sentiment in the market. Without the demand recovery, because GDP growth and oil demand growth are so closely correlated, you're not going to really see any sort of impact on the oil price, and there's really no reason to be buying futures at this point.
And Shmuel, can you believe that just a year ago we were talking about oil at $145 a barrel? I mean, it's much less than that, probably half that mark now. But what has changed in the oil market since?
Well, I think in the most fundamental sense, you've just seen a very large demand erosion, especially in the OECD countries. The U.S. has been running at about 1 million barrels a day less demand for oil than there has been at this time last year. And you've also seen Japan, which is the third largest oil user. Their consumption's been down anywhere from 18 to 20% from year on year. The only place you've really seen any demand growth has been China and in India and also the Middle East. But I mean, the U.S. they consume about anywhere from 18 to 20 million barrels a day of oil. So when that market starts to slow down, you just see the price slow down quite a bit. At this point this year, the only thing that's really been propping up the market has been a lot of the financial sentiment and also people buying oil futures as a hedge against the falling dollar.
Okay, Shmuel, thank you for checking in.